Good afternoon, and thank you all for joining us today. I am NIN Desai, and I will be your host. I started my professional career at Merrill Lynch with their private client group. At Merrill, we manage portfolios of high net worth individuals. While it was great to trade stocks and bonds, I was always curious about how these companies went public. Thus, after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with a global presence focused on software, communications, semiconductors, and internet and digital media. Here are a few transactions I worked on at PCS. In 2005, IPOs were at the peak, and it was amazing to take all these companies public. But that led to another question. How do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about $135 million of assets under management. My most recent transaction at Alpha was Circon, a software as a service provider company, after which I formed NIN Ventures in 2013. Since then, NIN.VC has been the recipient of numerous awards, and I've also been awarded 2015 CE of the Year Illinois for innovation and contribution to the venture capital and private equity industry. Other awards include Private Equity Fund Manager to Watch for 2017 by Corporate America, Leaders in Private Equity by Corporate Vision. Now let's dig into today's agenda. Alternative assets are non-traditional investments that would typically not be a part of a standard IRA portfolio or a regular investment portfolio. Alternative encompasses a wide range of assets, including real estate, commodities, luxury goods, such as wine and art, and also includes private equity and venture capital funds. Due to their unconventional nature and valuation, some of these assets have been mainly the domain of wealthy individuals and institutions. The global alternative asset market is approximately $28 trillion and expected to be $14 trillion by 2020, according to PricewaterhouseCoopers. However, the alternative industry is reshaping, and with this, new sources of capital are emerging. For example, venture capital, which provides financing to early-stage emerging companies with high growth potential in exchange for equity or an ownership stake. The risk VCs take investing in disruptive technologies or business yield higher returns this limited partners require. Since the beginning of the 20th century, venture capital has been the domain of wealthy individuals and family. A typical LP in a venture fund would be institutions, pension funds, endowment funds, family offices, etc. However, the 2008 financial meltdown led to a liquidity crisis for entrepreneurs, companies, LPs, and VCs. Fewer IPOs in the market means no exit for VCs, no returns for LPs, and as a result, venture funds were on a decline. No new funds means less startup funding, low employment, and slow economic growth. Thus, on April 2nd, 2012, the Jumpstart Our Business Startup Act, the JOBS Act, was introduced, which enables crowdfunding for all Americans. And that's how NIN Ventures, or NIN.VC, came into existence. NIN.VC is a crowdfunded technology venture capital firm that is offering its membership interest under the JOBS Act and Regulation D of the U.S. Security Acts of 1933. NIN.VC is a unique and first-of-its-kind attempt to bring venture capital retail and give people the freedom to directly invest in a fund with the amount of their choice, which also leads to a better financial reward system. The offering is being made via general solicitation and general advertising, which is permitted by Rule 506C and contemplated by Title II of the JOBS Act. This rule came into effect September 23, 2013, and we were the first ones to go live with a website and videos about our fund. NIN Ventures also became the first venture fund to be seen on a billboard, which was followed by in-taxi ads and other social media facilitated marketing. Learn more about us on Facebook, Twitter, LinkedIn, or NIN Ventures TV. Crowdfunding is a practice of raising contributions from a large number of people, typically via the internet. Since 2004, the crowdfunding industry has grown from 16 billion to an estimated 34 billion in 2015 and is doubling or more every year. And according to the World Bank estimates, crowdfunding will have a global market of 96 billion by 2025, which is 1.8 times today's global venture capital industry. Crowdfunding is spread across several types of funding model, including rewards, donations, equity, and debt. The two most popular types of crowdfunding methods are rewards and equity. For reward-based crowdfunding, entrepreneurs pre-sell a product or service to launch a business and sometimes even in return for gifts or thank you notes. For equity crowdfunding, the backer receives a share of a company, usually in exchange of the money pledged. For NIN Ventures on NIN.VC, it would be limited partner interest in the NIN Ventures Technology QP fund. However, there is a major flaw with crowdfunding, and that is what NIN.VC is solving. I come from an entrepreneurial family, so I can speak on their behalf. Entrepreneurs are brave and courageous bunch that are determined to change the way an existing industry functions. On that journey, they need a lot more than just financing. They need guidance or domain expertise, help with PR and marketing, recruiting, viable exit strategy, and more often follow-up financing, which crowdfunding portals are not able to support. On the other hand, crowdfunding exposes investors to a whole new asset class, which the normal population never had the knowledge or expertise to invest in. About 99% of startups fail, so on top of that, low minimum investment like $1,000 does not give them a say or a board seat, putting investors at a high degree of risk. At NIN.VC, we solve all those issues. NIN.VC provides diversification. We take board seat on all our investment and lend the necessary support that an entrepreneur needs to build a business, like they would get at a traditional venture capital fund. And the most important part investors care about is the ability to direct invest and enjoy direct return, which is not the case with the traditional venture capital fund. NIN.VC has the best of both worlds. We are a hybrid between a traditional venture capital fund and a crowdfunding portal. Alternatives are high-risk, long-term, illiquid investments which are often hard to value, but they tend to generate higher returns and also have low correlation with other asset classes, which helps with portfolio diversification. The market is flooded with a number of investment vehicles, including stocks, bonds, mutual funds, IRA, real estate, and alternatives like private equity and venture capital, among others. Most people are short-sighted and have a traditional portfolio that is stocks, bonds, and money market versus taking the long-term approach and investing in alternatives like venture capital. Yale is currently the best performing endowment fund in the United States. Since 2008 to 2015, Yale has increased its asset allocation in private equity and venture capital from 20.2% to 33%, out of which 16.3% is venture capital, compared to 13.7% in 2014 and just 10% the previous year. Historically, if you look at U.S. Venture Capital Index and S&P 500, U.S. Venture Capital Index tends to outperform S&P 500, and they also have an inverse relationship, which allows true diversification and also help mitigate the risk involved in having only a stock and bond portfolio, which is the strategy most institutions and sophisticated investors follow, which leads to true diversification. There are a wide range of options when it comes to investing in alternatives. NIN Ventures Technology QP Fund is currently available to accredited individuals and firms with a minimum amount of $100,000 using multiple investment options like self-directed IRA, defined benefit plan, digital currency, for example, Litecoin, Dogecoin, Bitcoin, or just a regular checking or savings account. Self-directed IRA. Self-directed is a descriptive term that is used to describe how some IRA providers administer the assets they hold. With self-directed IRA, an individual controls what their IRA invests in. Self-directed IRAs allow investors to hold alternative assets within their tax retirement plans, such as private placement in venture capital. Like any IRA investment, a self-directed IRA has a built-in tax-deferred growth, and thus an individual will not pay capital gain tax on the growth of the investment. The return will flow back to the self-directed IRA and will not be taxable to the account holder. The self-directed IRA allows true diversification that is otherwise not achievable in a standard IRA portfolio. A defined benefit plan is a retirement plan that can invest in a wide range of securities and investment products, including venture funds. Some of the advantages of investing from a defined benefit plans are all contributions made to the plan and subsequently invested are top-line tax deductible to the business, whether the business structure is sole proprietorship, LLC, LLP, PC, C Corp, or an S Corp. The investment growth is tax deferred under the umbrella of the defined benefit plan. The contribution might be significantly greater than that of 401k profit sharing plan to help increase the retirement savings account for the business owner. Digital currencies are emerging as a new form of alternative payment and global currency. We understand the significance of this change and thus allow digital currency owners like Bitcoin, Litecoin, and Dogecoin attain liquidity and tap into venture capital by investing in NIN Ventures Technology QP fund. There are many vendors that accept digital currencies and various places to spend it, but NIN.VC is an opportunity to invest and attain liquidity for digital currency owners that are concerned about currency instability. So what does NIN.VC invest in? NIN.VC invests in Series A and B rounds of disruptive technology companies, which are early to growth stage private companies. At NIN.VC, it all starts with a disruptive technology. A disruptive technology is an innovation that changes an existing industry and creates new value network, displacing an earlier technology or way of doing business, just like how we're changing the venture capital industry. At NIN.VC, we start with an entrepreneur. We invest in an entrepreneur because entrepreneurs build companies and not the other way around. Being an entrepreneur is the hardest job in the world, and entrepreneurs face varied challenges when it comes to taking the disruptive technologies to market. The few attributes that we look for in an entrepreneur is the ability to dream big, experience and expertise in the industry, ability to communicate with the team and outside, flexibility to adapt to a fast-changing environment, and certain personality traits like being focused, dedicated, disciplined, and work hard to accomplish their goals. As long as the company has certain ingredients like a good management team, a disruptive technology, a viable product, a good revenue generating strategy that form the basic foundation that leads to long-term success. We at NIN.VC like to invest in companies that are going to stand the test of time. Every sector at some point is up for disruption. Our focus for 2017 is primarily on 3D printing, fourth industrial revolution, cloud computing, virtual reality, financial services technology, education software, and other path-breaking sectors within the United States. Our goal is to invest in the next big trends within these sectors. So who can be a part of NIN.VC? Recently, the SEC approved Title III Jobs Act equity crowdfunding for non-accredited investors, which allow any U.S. citizen, regardless of income, to make direct investment via a crowdfunding portal. However, investment in a fund like ours is still limited to accredited investor. One must be an accredited investor and verify themselves as an accredited investor before they can invest in the NIN Ventures Technology QP fund. An accredited investor is an individual with an income of more than $200,000 per year or a joint income of $300,000 in each of the last 2 years, or has a net worth exceeding $1 million either individually or jointly with his or her spouse, excluding the primary resident. For an entity, any trust in excess of $5 million qualifies. There are multiple ways to verify if you're an accredited investor. For an individual, it's income, asset, and third-party verification. For an entity, it's asset and third-party verification. Now let's go through the investment process step by step in detail. Visit www.nin.vc to sign up. Sign up is simple: first name, last name, email, password, and acknowledge that you're an accredited investor. Once you sign up, you get access to our marketing materials, PM, investor presentation, and other suggested readings. You get invited to attend our events and calls. You can also schedule a one-on-one meeting with us at our office or online via Skype. Once you decide to make an investment, accept the risk and disclosure statement that will explain what venture capital investment is. The next step is to verify accreditation. Once that's in order, it's only a matter of filling out a subscription document and a W-9 form on NIN.VC. Last step is as simple as selecting a payment method and the amount you wish to invest. Please note that venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing the other suggested reading on our website before making any investment decisions. Unfortunately, we do not have time for questions today. Please email your questions at contact@nin.vc and we'll make sure we answer them all. Thank you again for being on the call. Sign up on NIN.VC to begin your investment process, and feel free to reach us at 312-953-0930 to schedule a one-on-one meeting or with any additional material request. Have a wonderful day and happy investing.